Hello everyone, and thank you for joining me in today's weekly analysis webinar. Today is Monday the 16th of September. My name is Mohanad Yaout and I'm the Chief Markets Analyst at PO Prime. Today, of course, we're going to have a look at the markets, what we are expecting, and what are the key risk events that we should focus on for this week, especially that we had brilliant moves during the last week. Let's say it was great moves. Personally, to me, it wasn't the best because it was not somehow as I expected, specifically talking about gold. Personally, I was looking for a short position. I still don't really see that gold will continue any higher. I'm not so happy with the momentum generally, but yeah, it is what it is. This is how markets moved, and sometimes, yeah, we do expect markets, but this is pretty normal that sometimes on the other way around, things will not be going in our direction. So today, it's a very, very important session for two reasons. First of all, this week is pretty tense. We have a lot to be focusing on. When it comes to the economic agenda, we have, it's the central banks week. Let's say we have the Federal Reserve meeting, which is the most important of all. We have the Bank of England, and also we have the Bank of Japan interest rate decision. So we have three central bank meetings this week. We also have a lot of economic data that we will be looking at. So that's the first reason why this session today is really important, because basically it will be a tough week. The second thing is because I'm not so happy with how things went during the last week and how markets behaved. I want to really take some time to focus so much on the technical analysis. And although it will be a tough week, however, we'll have to know what are the scenarios, what are we expecting, because as we speak right now, markets are more tilted to a 50 basis points interest rate cut in the Federal Reserve meeting. And that's why basically maybe markets moved away from our expectations, because markets currently see a 50 basis points interest rate cut in the next Federal meeting. So yeah, let's see what we are expecting. Let's see how to get prepared with our technical analysis scenarios and whether there are good trade opportunities for this week or not, because I don't know about you, but I personally ended the last week on a loss. Okay, so we will need to try and recover this back and get our money back from the markets. Okay. Starting off with the economic agenda and starting off with today, Monday. As we all know, Monday usually starts the week with lower volatility. I mean, we don't usually have a lot of economic data to be released on Mondays. Add to that, today we had the Japanese off day and the Chinese markets are off as well. So Asia markets didn't quite see a lot of liquidity, and that's why we had some extended moves on gold higher to reach almost 25.90. Yes, it was a great move. However, it was due to the fact that liquidity was quite low to the upside. So it was all basically because of Australian markets. Okay, moving forward, what do we expect today? We in 5 minutes we'll be having the ECB's Dick Winters having a speech, which is quite important because, you know, during the last week we have seen a rate cut by the ECB. So we want to know what are the comments from the ECB's members about what happened and what are their expectations for what's going to happen in the next meetings. We have the wages in the Eurozone, the trade balance, and we also have the ECB's Lane, a member from the ECB. He will be also as well speaking. So today, let's say pretty much we will be focused more on the euro, and we have a lot to be focusing on. At the end, I don't really believe this will drive higher volatility than usual, but I mean that the euro will be seeing some moves, especially that it has already been moving since the last week. I mean, for the euro, it moved higher last week, and we'll definitely see this on the charts when we get to it. Okay, so yeah, maybe we might see an extended move to the upside today on the euro with the speeches from the ECB. And that's that for today. We only have the New York Empire State Manufacturing Index, not really that important. Moving on to tomorrow, Tuesday the 17th of September, things will start to get a little bit more interesting. And this tough week, let's say, will start tomorrow on the 17th of September. Again, we will see a continued vacation of the Chinese markets. We have the ZEW economic sentiment for the German economy as well as the Euro economy, which is really important. And we have the retail sales data coming out from the US, retail and core retail sales to be announced tomorrow. A slight move lower. Not a slight move, it's a big move. As if you're speaking about the retail sales for August, on a month-on-month basis, the previous month, which was July, was basically 1%, and we are expected to move lower with 1.2% to a negative 0.2%. That's a big move. Let's see if this basically plays out. I think maybe we will see a 50 basis interest rate cut after all this week. Maybe I was so convinced that the Federal Reserve will do a 25 basis points interest rate cut. However, markets are seeing the other way. Markets are seeing a 50 rate or a 50 basis points interest rate cut. Would this happen or not? The retail sales data will be too late to judge, because I mean, the Federal Reserve meeting is on Wednesday, the 18th of September. So it starts on Tuesday, the 17th of September, which is the day when the retail sales will be announced. I think they will not be waiting for this data, to make a decision. But let's wait and see what will happen. But a move lower from 1% to a negative 0.2%. And on the core retail sales, moving down from 0.4 to 0.2 is something that will be quite interesting to see. Okay, moving forward to the core CPI for the inflation data coming out from the Canadian economy. No expectations so far, only for the CPI on a month-over-month basis for August to move down from 0.4 to a 0.1. Let's wait and see how this plays out. I'm not really following, or to be honest, the data on the Canadian economy doesn't really affect the Canadian dollar that much. I mean, the Canadian dollar is more affected with the US dollar and the oil moves. So yeah, let's see how the CPI plays out. Another speech by ECB Alderson, and the industrial production data coming out from the US economy wouldn't really say that it will drive higher volatility on the day before the Federal Reserve meeting. Okay, on Wednesday. So overall, on Tuesday, yes, we expect some higher volatility during London and the US sessions. And starting Wednesday, the fireworks will begin. Current account, adjusted trade balance, exports, trade balance from the Japanese economy, and the CPI, which is important. CPI from the British economy will be announced. So the CPI on a monthly basis and a yearly basis for August expected to stay around the same levels of 2.2%. And basically, it doesn't really matter what's happening with the general CPI in the Great Britain, because the issue right now is the services inflation. So we will have to dive deep into the details of the CPI to know, even if the inflation stays the same, maybe goods inflation is declining, but the services inflation is still elevated, and that's why we're having the general, 2.2% if expectations came true. What I mean is, it's already just around the levels of target, because the target is 2% for the Bank of England. So Bank of England currently doesn't really focus that much on the CPI or the headline CPI, but we focus more on the details, the components if inflation is 2.2%, what's causing this 2.2%? Is it goods inflation? Is it services inflation? And so on. And the issue right now with Great Britain is the elevated service inflation. And we will also have these CPI numbers from the Eurozone. So if you are focusing right now with me, you will see that on Tuesday, we have CPI from the Canadian economy. On Wednesday, we have CPI from Great Britain and CPI from the Eurozone as well. Expected to remain the same, around 2.8% for the core CPI and 2.2. So no changes generally on the CPI from the Euro economy. Another speech from ECB, Macau, building permits and housing starts, crude oil inventories, and the Federal Reserve interest rate decision. So Wednesday is a tough day. We have CPI from Great Britain, we have CPI from the Eurozone, we have data from the housing sector in the United States, and we have the FOMC meeting as well. So as we said, FOMC meetings are usually conducted on 2 days. It's a 48-hour meeting, not only a single day meeting. So they will meet on Tuesday. However, the final decision will be on Wednesday, the 18th of September. And of course, we'll be having the FOMC press conference. As we can see, the federal interest rate decision on the economic agenda, it shows that expectations are to go down from a 5.5% or 5.5% to 5.25%, which means that as per those expectations, we will be seeing a 25 basis points interest rate cut, or a percentage point. However, when you look at the FOMC, the Federal Watch tool, the issue is, unfortunately, I cannot show you the whole chart here, but this is the Federal Watch tool, and it shows you expectations for the FOMC meetings. Current target range, which is the current interest rate on the US dollar, is between 525 to 550 basis points, and expectations are now 59% in favor of a reduction to 475 to 550. So this difference is basically a 50 basis points, not 25, okay? So with all the respect to the economic agendas that you are following, don't really trust this, because although here it says that 25 basis points are expected of an interest rate cut, but actually as per the markets, it's a 50 basis points. If you want to ask me about my personal opinion, what will happen, I don't know, to be honest. It's one of the few times that really the Federal Reserve could not be expected. And yeah, markets are expecting 50 basis points, but at the end of the day, markets are just expecting, okay? And expectations are as per the market and as per the economic data coming out from the US. It doesn't really mean that the Federal will go for a 50 basis points interest rate cut. And also, if you can see, expectations are 59% for 50 basis points, over 41% for 25 basis points. So it's not that 90% or 95% expectation, it's a slight 59%. So let's say both expectations are so close to each other. Personally, I would say I believe the Federal will go for 25 basis points, not 50, because the current, FOMC committee is more cautious than the markets believe. I mean, they follow the part which is better safe than sorry. So they will start cutting interest rates, but I believe that they will be following a series of gradual rate cut decreases, not a sudden 50 basis points. This is just It's not an expectation based on any science or anything. It's just my personal feeling after having, followed the FOMIC for so much time now. What do you think will happen? 50 basis points or 25 basis points? It's quite interesting to hear your opinions as well. Type me in the chat. What do you believe? Okay, moving forward to Thursday, the 19th of September, this is where we will be having the Bank of England interest rate decision, and expectations are to fix interest rates around the same levels of 5%. No change expected. But the thing is, we will want to see the rates or the votes from inside the Bank of England Monetary Policy Committee. How many members will be voting in favor of keeping the interest rates unchanged? How many will say we should cut interest rates? So expectations are that 7 votes will be for unchanged, 2 votes will be for the rate cuts, and we always know who those 2 members are, but let's wait and see how things will go. Most probably they will fix interest rates. Think they will make the 50-point cut as the dollar has been losing strength? You can never expect what the Federal Reserve will do based on what markets or prices have been moving, because prices move as a result of market expectations. They follow the facts. They don't lead the facts, okay? The dollar has been losing strength because market expectations are that the Federal will cut 50 basis points. This doesn't mean that the Federal will cut. This means that those are just market expectations. Those are just people, making some shifts in their investments, in their portfolio, based on what they believe could happen. Doesn't really show that this might happen or will happen. You know what I mean? Okay, another one says, yeah, that's my thinking, 50 basis points. Maybe, maybe not. We will wait and see. But personally, I'm more on the favor of 25 basis points, and let's wait and see. So after the Bank of England interest rate decision on Thursday, we will be having the initial jobless claims and the continuous jobless claims from the US economy, and the home sales as well, the existing home sales. So I think we had the housing starts on Tuesday. No, it was the retail sales. Housing starts, I think, is not this week. So we have the existing home sales on Thursday and another speech by ECB. So guys, expect a lot of volatility on the euro during this week, because we will have a lot and a ton of speeches by the ECB members, okay? Friday, we end this tough week with the Bank of Japan interest rate decision. Expected to leave interest rates at the current levels after hiking them in the last meeting, and they caused this huge moves on the Japanese yen. And it's important not only to follow the interest rate decision here, which is widely expected to be kept the same, but any hawkish or dovish comments by the Bank of Japan members will definitely affect how markets react to the Japanese trades in the next upcoming period. We also have the retail sales out of the British economy. Here's the press conference for the Bank of Japan, and this is really important. We have some speech from Nan, who's a Monetary Policy Committee member from the Bank of England, Christine Lagarde, ECB president. So as I told you, we have a ton of comments from the ECB. So let's say Monday will start the week today with medium volatility. Things will start to get tough on Tuesday. It will definitely reach the fireworks on Wednesday. which is the Federal Reserve meeting, slightly come down, to Thursday, and we should end the week on Friday with, weak somehow, or medium volatility, not that strong. So this is how, the week will go. Expect very, very high volatility on Wednesday, especially that the Federal Reserve cannot be expected this time. 50 or 25 basis points. Let's wait and see. Okay, I think we are done here with the economic agenda. As I said, we'll have a lot of time discussing technical analysis today, because I don't really love to be wrong in the markets. I know this is not good, but let's start with gold. Let's start with gold, because I'm not so happy with what's happening here. Okay, why did I say that gold was supposed to go down? If you haven't been following me for the last 1 or 2 webinars, for the last 1 or 2 weeks, I'm not so happy because momentum is down. So after a great move upward by gold that was in March, what was happening here was pretty much nothing. I'm talking about this period from here to here, right? From April to, let's say, August. Although gold was actually moving higher, but slightly moving higher. I mean, if you compare this part, where I have this circle around, with this part, this is great momentum. This is great, sorry. I'll have to remove this in order. This is great momentum, right? Because in a matter of, let's say, from middle of February to the beginning of April, which is only a month and a half, gold went higher around 15 or 16%. This is a great momentum. However, from, let's say, the beginning of April to September, we moved only higher by 8%. So you see the difference? A month and a half, we moved higher 15%. And from April, May, June, July, August, and September, almost 5 or 6 months, we only moved 8% or 9%. So this is how I see momentum. This is how, and without looking at the chart itself, if you're just new with momentum indicators, you will see that price were moving higher. It was, creating new highs, higher highs, like this one. This is higher than the previous one. Again, this is higher than the previous one. This is higher, and so on. So we have higher highs on the price. However, when it comes to momentum, it was basically lower highs. This is why I was, rooting for gold to move lower. What happened here was basically what I didn't expect, what I didn't see. So, and if you see, again, momentum for this last move is not so good. So prices went down, prices went higher, but momentum again went down. Not so happy with what's going on. Okay, let's have a look on the weekly time frame. Okay, so that was an explosive move here. 2 weeks or 3 weeks of doing nothing. Again, higher move. Okay, what I'm currently doing, just to make you with me on the same page, what I'm currently doing is I'm looking for a way to short gold. Okay, I'm looking for where this upward silly weak trend could be, reversed. weekly time frame is just moving higher. That was a sideways correction. So we had a brilliant move higher. 1, 2, 3. Break above. Retest. No. Because the thing is, we don't have previous price history, right? We don't have previous price history. Let's say if this is another correction here. This is the daily time frame now. This is a correction, which is sort of a flag or a pennant, I mean. And we will continue moving to get the target. It's so far. I think it will be so far. No, that's so far away. 2,700. Okay. It seems to me that maybe I'm wrong after all, and the gold will continue moving higher. But again, momentum is not suggesting this. On the 8-hour time frame, yeah, now we are losing momentum for this upward move. I mean, look at those strong candles here. That was a strong one. That was also a strong one. Another small, but I mean, candles are getting a little bit weaker to the upside. Will we go back and retest those levels 25.20, let's say 25.30? Will we go back and retest those levels? Okay, we will have to put some conditions here because I don't want to take so much time talking about scenarios that might or might not happen. Personally, how could I trade gold during this week? First thing is, I will not buy because it's already too late. I mean, I was on the wrong side of the trade. My stop loss was 24.45 and I got stopped out, which is totally fine. So now that we are out of this zone, it's already too late, because if I just buy now from here, where will the stop loss be? Like, come on, it will be so far away. In order to get at least 1-to-1 risk to reward, this might mean that my target will be $2,715, which is way far. So in this case, I will not be looking to buy. I might be looking to short for a retracement. My conditions for a short position will be really simple. On a smaller time frame, see this 1-hour time frame? You can still see some, highs and lows formed, right? And I can see some momentum weakening here because this high is not so much higher than the previous high. This one was slightly higher. I mean, as we move along, prices are trying to make a top here. Okay, this is just hypothetical. In this case, if I want to short, I will wait for a support to be broken. Currently, as we speak, the last support is 25.77. Right? That's the last low. If prices decide that during today we break below the 25.77, I'm shorting gold, 100%. What if that didn't happen? Maybe prices from here will create support and move again higher to form a new high, slightly new high. So this will be the new support, not this one. This will be the new support, which is 25.82. I will wait for the support to be broken and I'll short gold. So how to trade gold during this week? I'll just be waiting to short. and my entry will be a break below the previous. I'm looking for a market or a change of character. Okay, what's a change of character? If you're moving higher in an uptrend and forming new higher highs and higher lows, whenever prices break below a previous low, this is when the market character shifts, and we call it a change of character. So I'm waiting for this. Whether it happens from here, whether it happens from here, once gold breaks below the last low, I would personally be shorting for a retracement with stops above the latest high, wherever this high could be, and I will be having some Fibonacci retracement targets. So let's say hypothetically, if this is the high, we move lower, we broke below support, I will be, you know, targeting on not 25. No, wait. I'll be targeting the 38.20% and then the 50% Fibonacci retracements. So high is target of gold 2620 now. Yeah, could be. No, it's a little bit far. It's a little bit far, but not impossible. But no, I don't really see it happening. I don't really see it happening. And guys, as you know, don't try to analyze this technically and, okay, say, what will happen if the Federal Reserve cut interest rates by 50 basis points? Yeah. Theoretically speaking, if the Federal Reserve cut interest rates by 50 basis points, the dollar should go down and gold should go up. But it's already been going up since last week, and the dollar is already sinking. So maybe markets are pricing in this already. Maybe if this happened, if the Federal Reserve cut interest rates by 50 basis points, which the market expected, you will see moves to the opposite side. And that's why I don't really see, okay, the Federal will do this, this will result in this sort of scenario, because the scenario, if the Federal Reserve cuts 50 basis points, is already playing out in the markets at the moment. Got what I mean? The only scenario I believe that might happen, or not might happen, it's technically impossible, but that if it happens, gold will continue moving higher and dollar will continue sinking lower, is that the Federal Reserve cuts interest rates by more than 50%. This will be a real shock to markets, but this is like literally impossible to do. So yeah, this is how it'd be playing out with gold during this week. I think this should be the 8-hour time frame. High is target of gold. Okay, we have answered this already. Could you please share your weekly outlook for the euro dollar? Sure. Let's check the euro dollar. The euro is almost really close to continuing the bullish trend. Why? Because it's really simple. Higher highs and higher lows. Here, that was the retracement phase. So we moved lower, low, lower high, and then a lower low. And currently, the euro is just about to test the previous high. It's around it, which is 1120. 1.1120, okay? We can see the bullish momentum here. So yeah, the euro, a break below 1120 will definitely push us higher to 1.1190. And then 1.1240. This is how I really believe will happen, or what will happen in the euro during this week. Not this one. Just slight adjust. 12. Let's say 1.1230. So the euro technically could go higher. euro technically could go higher, which means will it not? GJ, oh, look at the GJ. But I'm not so happy with markets right now. I am not happy with markets because gold is expected. I'm waiting to short gold, but the euro looks bullish, and somehow this means they are opposite to each other, which shouldn't be the case. Okay, I think the dollar will give us the clear picture of what will happen this week. On the weekly time frame, we broke this support. That's the dollar index now. Okay, we broke, retest, that failed, and we're moving lower. We just need to clear this low, and any lower low on the dollar index below the 100.60, this will definitely push us way lower. Okay, now remember this demand zone that we talked about, which was around 101 roughly. This demand zone, we cannot say that we didn't respect it. We respected it somehow because currently markets are, or the dollar is moving sideways around this demand zone. But the lowest limit of this move is 100.55. 100.55. A break below will definitely mean the dollar is going back to the 99.90, and this definitely means gold will continue flying higher, the euro will move higher. So I think the dollar it's a tough week. It will be a tough week, and personally I might be waiting on the sidelines. I might not trade this week because technically a lot of things could happen. Fundamentally, we don't really know the Federal Reserve what will be the decision. So to me, analysis wise, not trading wise, analysis wise, if the dollar broke below the 100.55, we'll move lower to 99.90, which means that we might see new higher highs or new highs on the gold, which means that my technical scenario as well on the euro, which is breaking above 1.1120 and moving higher to 1.1190 and 1.1230, will play out. The condition is the dollar breaks below the 100.55. Maybe what could happen, which is a high probability, that the dollar really respects the levels of 100.55 and will continue doing nothing during the week, just a sideways range. If the dollar moved sideways, euro will continue trading sideways, maybe around those levels as a correction, but instead of a downward correction, it might be a sideways correction now, what should mean that gold will not move lower as I expect. It might not move a lot higher as some of you guys expect, and we will start to form some sort of a high around the levels of 2600, and it will just be a boring week. This might happen. And of all the scenarios that I'm thinking of at the moment, this is the highly probable scenario I believe could happen, which is nothing. The dollar just trades around 100 or just around the same levels of 101 point, let's say. So we respect the levels of 100.55, continue trading in this sideways range. This will mean that the euro will continue trading sideways. This could mean that the gold will not move lower, but it will move somehow slightly higher, but with weak momentum. To confirm my medium-term outlook on gold is that we are trying to find a high here. We are trying to find a top. We are trying to create an all-time high that will not be broken anytime soon, and will then continue to move lower. And let's see what could happen. And now you have all the scenarios, and of course the Federal Reserve will decide which scenario will happen. The dollar either breaks below 100.55, continue moving higher on gold and the euro, or it just moved in a sideways range. The euro will pretty much do nothing, and gold will try to find some sort of support on some kind of resistance near the 2600. Please, if you got what I explained so far, please write me in the comments. Tell me that you get it. Tell me that you're somehow prepared to know what to expect in the markets. Pound Canadian, sure. Yeah, let's take off our minds out of, you know, what's happening with the dollar, because I told you at the beginning of this session, this will be a tough week. Pound Canadian, okay. Oh, it's flying. It is flying. Nice. Guys, I was thinking about something, and maybe I thought I would take your opinion. Maybe, because I do this weekly analysis on Monday, right? Sometimes right after the weekly analysis session, markets move in our direction, or it moves away from our direction, which is pretty normal. I thought maybe we can do like a follow-up analysis session midweek. So we do this maybe on Monday, and we do have another midweek session on Wednesday, which will be either to confirm that markets are moving in our current direction and that things are great, and we'll just be like a follow-up, or other way around, is that, okay, things didn't go as we expected on Monday, and this is the new analysis. This is how markets could be moving, because at the end of the day, markets could move anyway. That's great. To reinforce the analysis, okay, that's a good idea. Nice. Okay. Stay clear till we get a better picture on gold. Yes, I will stay clear. Okay, midweek sounds good. My first time here live. Oh, you have been missing a lot. We have been doing this since April, every Monday. Yes, a follow-up analysis will be fantastic. Okay, I'll see how we can do this, and maybe we can try 1 week. Definitely a good idea, midweek live. Okay, maybe you can try 1 week, and we will see if a lot of people, you know, is there to attend. I'll definitely continue this. Okay. For the pound Canadian, I can see it's flying. I can see it's moving way higher. How about the weekly time frame? No, I think we'll have to look at the monthly time frame. So we broke a lot of resistances. We broke this one. We broke even this one. We are heading for this one, which is the 1.8085. The weekly time frame. We will need to adjust our levels. This is really old. No need to just look at that. This one was good, but it already got broken. And this one should be the levels that we look at. 1.82, let's see 1.82. So the pound Canadian is flying, will continue to fly. Although I, again, don't like momentum so far, because it was, you know, moving slightly higher. But I think the next level will be 1.82 before really retracing and having a great correction. On the time frame, on the shorter time frame, I mean the daily is looking good. High, low, equal high. We started to form support and we are heading higher. This could be a really good correction here, a pennant correction. So that was a great impulsive move higher. We might see another one. Yeah, I'm bullish. I'm bullish on the pound Canadian. Just on the shorter time frames, look for any retracement, and wow, it's flying. Another pennant here. Wait, what I'm looking for, not this one. It's definitely heading higher, another 75 basis points at least today. Is it too late to buy? Oh, I think it's too late. Not one-to-one. No, but you got my idea. Pound Canadian is absolutely bullish. Absolutely bullish. Could you do GJ after? Yep. Let's do it. What time frames are you on to pick your areas of interest? Higher time frames. I mean, I've just, analyzed for you the pound Canadian live, and my level of interest, which is 1.82, which is my medium term target, I got it on the monthly time frame. Refined it a little bit on the weekly and the daily, but it's the monthly time frame and the weekly time frame. Someone is speaking here a language that I don't really understand. I only speak English and Arabic, so I'm sorry, you might have to translate. Let's have a look on the pound yen. This thing moves in only one direction now. So that was like dropping, another move higher, again dropping. Okay, how about the weekly time frame? We are definitely going lower to fill this wick. You see this wick? How can I, yeah, which is this one. Okay, that was a rejection. Markets went lower, rejected something here, went higher again. In this case, when markets go back again and close below support, this definitely means that some orders here during this rejection, some prices were not traded at because this rejection was quick. So in this case, we will need to move lower and close this gap, fill it. Think of it as a gap. It's not technically a gap because it's a wick, but think of it as the same. And if you look to the left here, you will see a move lower, a base, and a move higher. So this is a demand zone to me. And I would say I'll be really conservative with it. And this will be my demand zone. That's why that was a demand. We came down, definitely triggered some buy orders, and we're heading back. I wouldn't really say that we're heading back to respect it as demand because it's already exhausted. We already filled in the orders here for a move higher, but I'm saying that we are moving lower to test those levels again, probably even break below. So, okay, that's a very long analysis, but you get the idea. I am bearish on the pound yen. Not really a long time analysis. I mean, it's only like 350 pips. And during the previous week, the pound lost 200. Yeah, so it's pretty normal, 350 pips for the pound yen during a week. We might see it during this week. Imbalance, yes, ICT guys call it imbalance. Guys, believe me, when you are around technical analysis for so long, you will know something. All technical analysis are the same. It's exactly the same. Areas of interest are the same. But if you're a supply and demand trader, you would call it a supply and demand zone. If you're an ICT trader, you would call it an order block. If you're and so on. But at the end, you got my idea. Technical analysis is somehow the same. Okay, would you short it now? No, I wouldn't. I wouldn't, because on the 8-hour time frame and the 4-hour time frame, you can see it's slightly moving lower and momentum is not good. It's showing a bullish divergence. So from here, I might be looking for an upward move first, something like the previous one, and then I'll short. You get my idea. I'll not short from here. I'll wait for a new high, preferably lower than the previous high. I will short, stops above the last high, and then I'll have my targets around this level, because we have caught this demand zone on the weekly time frame. If you look here, you will find another demand zone. Is it here? I'll probably say this one, this explosive candle. It started the whole move, and this is the base candle. So again, we definitely have, if you say it as ICT, we have liquidity down here. So I'm bearish. Pound yen, not from here. I wouldn't really short from here, but I will wait for an upward move to gather some short momentum and continue the move lower. Okay, anything else that we didn't discuss? Let's look at the US indices. That is JY, it's the Japanese yen, pound yen, yeah, GJ, pound yen. Okay, okay, on the weekly time frame, the Nasdaq looks really bad. Really bad. Why? Because here we have demand. We were moving lower. We formed this huge base candle, which was somehow indecision, a huge explosive candle higher. So that was a demand zone, a really big one. And I wouldn't really trade this. But it's a demand zone as per the rules, as per the book. We moved higher. We formed a base. We had this huge explosive candle. So this is supply. Believe it or not, this is also supply. For gold, I'm waiting for confirmation to sell. That's my bro. That's my buddy. I'm waiting for this too. Okay, so we are doing nothing on the Nasdaq. We have this demand has already been exhausted because we moved lower and we moved higher. I think, okay, that's a level of interest on the daily time frame. You see this explosive candle? We have a base candle before. So the leg in, base, leg out. Definitely a supply zone that we will respect. Can I just grab it? Yeah. Okay. Forget about anything else. Focus on this supply zone on the Nasdaq. Momentum is weak. We are approaching levels that basically pushed us lower around 4%. So at least we will move lower for a retracement if we're going to continue higher. This is really a good idea to trade the Nasdaq. And yeah, I know this session has been really tough so far, and we are just, you know, really not happy with markets so far, but this is something I could trade. And this could even play out before the Federal Reserve, because today is Monday. We have Tuesday and Wednesday for this to play out. We are already near the supply zone. So yes, 100%. You see momentum here is really weak. This is a definite short for me. From here, stops might be around here, 19,700, let's say. Okay. And if this is the target, it's at least 1.45. Oh, someone's cleaning from the outside. Okay. This I think would be 38.2, a little bit above that. I'm good. I'm good, you know, to take 1.5 risk to reward from here and get out. So yeah, this is the Nasdaq. I think we might see something similar on the other indices. Let's see. Wow, it's the US 500, it's the S&P. Where's our supply zone? It's here. Wow, indices are really great. I'm glad we looked at it because I was a little bit afraid. I thought, yeah, maybe the US indices as well will be really risky this week, but see what happens. 4 hour. A little bit, we are just short, you know, from reaching this on the S&P. But again, after a brilliant move higher, we are continuing to move higher, but there is no real retracement in this upward move. It's only tiny retracements. This didn't even reach 38.2% Fibonacci retracement, none here. So I think when we reach this level, which was a huge selling pressure here, we will at least see a really great retracement. What's that indicator you're using? This is a momentum indicator. It's not really common. Wait for a webinar explaining this momentum indicator because this is not the first time I've been asked about it. Today's the 16th, maybe Friday, maybe the 27th of September or the 4th of October will be a webinar specifically talking about this momentum because I've explained previously the supply and demand. But how to know when we are approaching a level of supply whether prices will break through those levels or not? It's the momentum. If prices are going higher and it's weak and there is a level of supply, you have unfilled orders, this increases your chance that we basically move lower. So after an hour in this session, we have almost not really given any trade opportunities here because, as I told you, it will be a tough week. However, to conclude this, I am happy with what I'm seeing here on the US indices. Again, this will definitely be the same on the Dow Jones. Be aware, don't trade the three, not because the same idea or the same technical setup is available on the three indices. You will just, increase, because at the end of the day, it's a technical setup, but it could fail, right? It's normal. But at least we have the technical foundations for a short. If you just short the Dow Jones, the S&P, and the Nasdaq, you will be increasing your exposure to the US markets. And if things go south, you'll be in a huge drawdown. Personally, as by the looks, I don't know why I'm saying this, but the Dow Jones isn't really, because the supply zone is really, the base candle is not so good. Where's the leg in? So I'm not happy with the Dow Jones, as by the looks, okay? For the Nasdaq, it looks good to me. But even better is the S&P. Why? Because the Nasdaq here, although we have the supply, but we have another level here. Maybe prices will break above this supply just to tap into this level before moving lower. By then, we will be stopped out. So maybe no. But for the S&P, this level is exactly like this level and increases the risks of, increasing the probability of a reversal. I think I've made it clear for you why I like what I see on the US indices. I'm basically expecting a move lower before the Federal Reserve, because the Federal Reserve could come just, it will not respect any supply, it will not respect any demand, it will just do what it wants to do. Watch good to go lower? Yeah, it looks good to go lower. Guys, do you have any other questions here? Because I think we'll have to go. Which goal to go lower? I'm waiting. I don't really like what's happening here, but as we said, my condition is breaking the previous low is a definite short for me. Okay? And guys, this is my personal email. Okay, I'll type it down for you here. Prime. please send to me like an email if you just want to, if you want me to do this midweek analysis session. Just send me an email that this recommendation is good with me and we would like to go with it. We'll just need, you know, a couple of emails just to confirm that people really want it, and I'll start preparing this for you. US 30 gold buy, because we just hit supply zone by the far left. I'm not sure what you mean. Okay, I think we're done here. I think we have been, oh, I think this is the longest webinar I've done. It already hit 1 hour and we're counting even more. So yeah, thank you very, very much for watching this today. And yeah, I'll see you guys next week. Hopefully when I see you next week, you wouldn't be really out of your money, because markets will not go away. Your capital could. So if you're not sure, don't trade. And if you're gonna trade, make sure to use the stop loss. Thank you very much. I'll see you guys next week. Take care. Trade safe. Bye-bye.